Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Wednesday, April 17th, 2019. So we did see a little bit of a pullback today that fits our profile that we've been looking for. Our predictive analytics model is still a little bit mixed, but right now what we're looking at is we're short-term bearish, intermediate term. This was bullish, and again, as I've been saying, it's been bullish since we were all the way down here. It was in December, and it was right at this move here where we got long at the 23.56, and the call was for this rally to take place and end in the springtime. So as I think I explained last night, I'm not sure, wasn't really expecting it to go in this format. I thought it was going to be a little more choppier, but the thing is that it was the time period that's really held things together, because this move was going to be bullish into the springtime, and this is where we are right now, and we are running into time periods where that is now starting to get a little long in the tooth, and the next trade that's pending right now is going to be the kill zone. And it's important because these are the types of move that happens with the kill zone. Now, we're not saying that it's going to be identical to this, but it's these types of things that take place. Now, we know as far as the long term, it's bearish, because we're not looking for a real low that's going to be able to really compare to what we saw, say, going into like the 2009, really into 2018, that kind of move to the upside until 2022. So this long-term bearish is going to remain that way. The two that are going to switch are going to be the short-term and the intermediate term. Short-term are the squiggles. So right now, as far as where we are with sentiment, short term, we're in the euphoria time period. And when we were coming off of those lows, we were all the way down, in this area here. And now on the intermediate term part, we're all the way up into the thrills. So short term, we are looking for a move to the downside, and it could be sharp where it's going to get people to capitulate, but we're not looking for that to be the intermediate term, a big drop that we're anticipating with the kill zone, because this is still neutral to bullish. And once we get all of these three red, where it's short-term bearish, intermediate-term bearish, and long-term, that is when we get the types of moves that that really go straight down. And that's what took place up here, and we were looking for a very, very sharp move to the downside. It went, and we knew from this level here that it wasn't going to be bullish until sometime in December. And it actually, when we got this big move here, we had a 0% bullish sentiment reading, and then we got the buy signal, and that's what got us long very early into this rally here. But like I said, as we went up and we started getting divergences from a technical standpoint, it went bearish, and we, that's when we, was closing long trades, when that was a mistake, and it should have just followed the time period. But that the model's not going to be right 100% of the time. It's going to be keep you on the right side as far as, this time was, it was supposed to be in the uptrend, and that's what's taken place. The short-term moves, we got some decent ones, but it wasn't really, I was looking for a even larger pullback before going up. So we're in the time period right now where things are going to start getting really dicey, and what's going to happen is sentiment is going to start steering the way, meaning that right now you can see that we've had extreme bullish sentiment readings up here. Everybody's bullish, just like everybody was bearish down here going into the lows. They're going to get long at the wrong time, and they're going to get short at the wrong time, and that's really what these sentiment charts do, especially when we're running into a time period where we're looking for that intermediate term change, to switch to the bearish side. But that, like I said, that still has a little bit of time. We're in what Woody is calling the halo phase, and that's when everybody just gets kind of hypnotized by the friendly market, and the news is everybody's happy and everybody's just looking up, and there's no worries. But what happens when we get into a volatility time period on the short term, like we are expecting right now, that's where we can get just a very fast, sharp move to the downside. It's not going to be like anything we saw from October to December, but it could be something that sheds 100, 150 points to the downside, but then finds support and heads back up again. But that move will get people bearish on the market. And once we hit this 11% bullish sentiment reading here, you can see we went from 100 to 11%, and from there, that was the exact low before we started heading higher again. So now we're starting to tick back up to the extreme bullish sentiment readings again. You can see the S&P going up as sentiment is diverging, and again, this is an indicator that nobody else has. A lot of people will use your regular technical indicators off of charts, but nobody can use a moving average of investor sentiment like Woody does, and that's really what the advantage part that we have over a lot of people, knowing when things are going to play out. So anyway, let's get back to this. So the dominant factor has been the interim trend, which has been up, and it's still expected to be that way. But short term, we're looking for some type of move to the downside. Now, what are you saying? Once the trend is reversed, it may also be momentous to the downside. So that's what I'm talking about, is once we get into the bearish readings on our predictive analytics model, this is kind of what we're expecting. And the thing is that we're not looking at this as a, like we're going into a 2007 to 2009 bear market. It's going to be moves like this that are going to continue, where we're going to get a 600-point move to the downside, 600-point move to the upside, 700 move down, 600, and it's going to just really be massive swings, and we expect this to last into 2022, like I said. So things are getting a little bit interesting is probably the best way to put it. And I think knowing where sentiment is, because when we get the big move to the downside and everybody's going to move to bearish sentiment, it's probably we're going to be looking for support, because we're not in the intermediate term bearish stage yet. So it's going to be a good buying opportunity, and that's what this pattern is showing right here, is that we're looking for a move that could come anywhere between the 2748 or even down to the 2700, and that will be this bearish wedge that's in place, and that's the target area. And then from there, another move up that can either just test these highs or slightly break, and that is going to be where the kill zone steps in, because everybody's going to be getting bullish at the exact wrong times, thinking that we're taking out these highs, and the next target's going to be 3,000. And that's when we're looking for this type of move to the downside. So you have to stay on your toes. Now, the predictive analytics, our predictive, say, indicator that I've been following, the forward-looking one, this was as the futures were ramping up this morning. They were up some 12 points. And this, I don't know if we can see it. You really can't. But this is at 9 o'clock right here, where this started heading down. And this was my clue that, guess what? That ramp up in the futures is not going to last, because this was already heading down. And I showed you in last night's report that this leads the way for the S&P. And if we go back and look what happened and look at a shorter term time period, I'm going to go to a 15-minute chart. This was our gap open, hit right into this trend line that obviously traders are paying attention to. And from there, it went straight down. So in the morning notes, I said, any gap ups like this, look to short, because I'm expecting a larger move to the downside. So right now, bulls, they need to get it back above this 29.19 or 18. We have the open gap at 29.23. The stop would remain at 29.30. The bears, they need to push it through right here, where the lows that we made today at the 28.95. If they get through that, then we're going to see a reaction trade down to the 28.75. And once the bears can get it through here, this is the important line, is the 28.60. Until they get it through here, the bulls are going to hang around. Once they get through this, we're going to see a panic trade or a move to the downside going viral down to the 28.16. And once we're there, that's when we start eyeing down some of the targets for this for the pattern, which will be anywhere from the 28 as 82 all the way down to this 2782 down to the 2722, and I wouldn't be surprised to see him close this gap right here. So the Bears still have some work to do. I'm not counting anybody out right now because this is the area that the Bulls have stepped in each time and bought. So if they can push it through it, that will be a step in the right direction. If they come through and they find support 2872 and then come up in this area is used as resistance, that will be the changing of the guard, and that's when I believe that we could see a sharper move to the downside. So with that, one quick note: we are having our special. This is going to be removed. This is our $100 a month, but it's a yearly fee on it, so it's $1,200. And if you want to just try it out, $99 for 30 days. Again, this is going to be removed fairly shortly. And again, just getting in at this time, you're going to know exactly when the kill zone is. So with that, have a great night, and I'll talk to you guys next week.